What is the best custodian to use with your RIA? That is today's question on the Transition to RIA question and answer series. It is episode number 135. Hi, I'm Brad Wales with Transition to RIA, where we help you understand everything there is to know about why and how to transition your practice to the RIA model. If you're not already there, if you head on over to transitiontoria.com, you can find all of the resources we make available from this entire series in video format, podcast format, there's articles, there's white papers, all kinds of things to help you better understand the model. Again, transitiontoria.com. Okay, in today's episode, we're going to be talking about what is the quote-unquote best custodian to use with your RIA. And for reasons I'm going to get into, it's hard to necessarily give some blanket statement about which one the best one is because, as you'll see, different custodians appeal to different advisors in different ways. And we're going to kind of go through what some of those variables and differences are out there in the marketplace. And hopefully it really helps you realize that this choosing a custodian for your RIA, whether you're starting your own RIA or if you're joining one, oftentimes a value proposition of the RIA you're joining is that they already have multiple custodians available to choose from. But amongst those, you would still need to make a selection. And so the question is, well, which one should you be using? And this is a big decision, as I'll kind of reiterate back at the end. And so I did want to kind of go into kind of the playing field, and there's some differences out there. So for starters, it's often thought of as the custodians in the marketplace as the big three. Now, this used to be thought of as the big four, and the four previously were Schwab, TD, Fidelity, and Pershing. Schwab acquired TD, so the big four is now thought of as the big three. And even then, it kind of comes down to how you define big. Is that based on assets on the platform? Is that based on number of RIAs served? And so even that kind of framing is get a little blurred, and there's other custodians that would argue that they're in the big three based on the number of RIAs they service versus assets. And so just know that out there is this so-called big three, but the reality is when you look at the whole landscape out there, there's actually closer to about a dozen custodians in the marketplace providing custodials for RIAs. Now, that doesn't mean you will necessarily be interested in all dozen and maybe not even half of the dozen, but it's important to know they're out there. It's important to know there's differences. And just as it would be if you're looking to maybe join an RIA versus starting your own RIA, if you're joining an RIA, there's lots of different options out there. And the biggest or the first one you talk to or the most well-known is not perhaps the best fit for you. And now it might be, but you want to at least understand what's out there. So to kind of help with that, I just want to go through some of the variables involved that differentiate the custodial options out there. Again, when you write them out, there's actually about a dozen firms currently in the marketplace supporting RIAs. So the first one is to be aware of. Most custodians, not all, but most custodians have some amount of minimums required to use their platform. And so while some custodians others say, hey, no minimums, we'll take a startup RIA, or if you're adding us as a custodian, I'll come back to that a little later. We don't have an asset commitment from day one kind of thing. And other custodians say, no, based on our business model, our value prop, we do have minimums. And those minimums for some custodians can run into the hundreds of millions of dollars in client assets, where they say, hey, if you want to use us as custodian, we need to see that you already have, in this case, there's hundreds of millions of client assets. And again, there's reason to believe that they will be joining you at the RIA, and then that will fulfill essentially our minimum. So just as a starting point, just know there's some RIAs, depending on your size, might not even be available for you to consider. So number one is minimums that are out there. Number two, just be aware there's different ways that custodians price out their services. Now, this is an interesting element to kind of all the different solution providers that you will potentially need. For example, if you have your own RIA and you're going to be leaning on a compliance firm, you're going to be leaning on technology, you're going to be leaning on maybe E&O. And one of those vendors, if you will, one of those solution providers is going to be a custodian to hold your client assets. However, unlike everything else on the list, and I just named a few, everything else on that list, those are vendors that the RIA is paying for directly for the services. So if it's a compliance consultant, they're providing certain compliance services for you, the RIA is paying them directly for that service. The custodial model, in part just because this is kind of how it ramped up decades ago, and generally for the most part, it hasn't changed a whole lot, although there's some voices in the marketplace that are suggesting it should change. But generally, custodial services, historically at least, have been indirectly paid for by the client. So not as the RIA writing an annual check or anything like that to the custodian, as is the case typically with technology solutions or compliance solutions, those sorts of things. I won't go into it too deep. I did a whole episode on how custodians generate revenue. But if you're curious, like, okay, well, what's the catch? If the RIA is not paying for it, the client's indirectly paying for this. It is things like the spread that the custodian makes on the cash sweeps that are in the account. There can be some transaction revenue. There could be payment for order flow. There could be lending, like things like margin. So there's several different levers that a custodian can generate and does generate revenue from, but it's typically not, again, historically been paid directly by the RIA. Now, and by the way, part of what a custodian will do, even though while you are evaluating them and doing due diligence on them, they will also do due diligence on you. One, do they want to just do business with you in general from your character and your background and those sorts of things? But also, they will profile your practice and try to understand what kind of revenue it would generate from them. And just because you have $400 million in assets doesn't mean you're going to generate the same amount of revenue as another practice that has 400 million assets because of those different revenue levers. One practice could be significantly more revenue for the custodian than another. So again, they will do that exercise as well as looking at that. But you will want to understand how these all differ. Now, some RIAs, and part of why this is on the list, have moved towards often thought of or called an asset-based pricing model. So that is typically basis points. You can call it a custody fee, you call it a clearance fee, a platform fee, whatever you want, where yes, these indirect revenue sources might still exist, but there's also, depends on the profile, maybe size of your practice, a basis point custody fee that is applied. And essentially, it's the RIA paying, but at the end of the day, it's the client paying it, right? Because the client is who generates revenue for the RIA, and the RIA pays it. So whether you line item that out for the client and say, "Hey, client, our services are, the proverbial 1%, and then there's a separate custodial fee of X bips," it's usually in the single digits. Or do you just absorb it into your fee and you pay it, and the client's kind of none the wiser? Except it would be disclosed in your ADV because it's essentially a wrap fee at that point. But the idea being that some custodians do have this. So it's important to understand, okay, as you look at different custodians, how they price out their services differ, and don't immediately default to saying, well, I don't want to even consider something that has a fee when there's something that doesn't have a fee, because you also want to know, what am I getting for the fee? So that would be similar to a client or prospective client saying to you, well, why would I want to pay 100 basis points for your services when there's a robo-advisor that costs 25 basis points? Well, you're providing two different services or levels of service, two different value props. And that's oftentimes the same with the custodians, that what you get for the fee might differ than another solution where there's no fee, but you're not given as much value as well. So you want to kind of bake the entire cake and say, okay, I need certain resources out there. Am I going to be provided by my custodian and maybe there's a fee, or am I going to be sourcing that on my own and there's a cost associated with that? Now, at the end of the day, you still might go with the one that doesn't have that custody fee, because that still might be the better solution for you. But main point being, just know that there's differences in how the custodians price out their services. The next variable to be mindful of is how technology typically operates with custodians. So they're kind of two extremes, if you will, and then there's kind of merging more towards the middle at times. there's one approach, and it's not to say one of these approaches is better than the other. It's ultimately what's going to be most appealing to you and helpful for your practice. On one end of that spectrum, from a technology perspective, is custodians that say, yes, we provide some core technology that's just part of any custodial operation, facilitating a trade in an account, doing money movement between accounts type thing. But for things like a CRM or financial planning or that portfolio management tool that you're going to build models and you're going to do rebalancing and all that, one approach is for the custodian to say, hey, as opposed to us trying to build that ourselves, we instead spend our resources integrating with the best in class third-party tools that are out there. So you, RIA, can go out there and choose, for the most part, whatever technology solution you want for your so-called tech stack. I've done an episode on what is a tech stack. And hey, you build that and we will integrate with that so the trade-in and everything can flow back through us as custodians. So one approach is to say, hey, by design, we kind of keep those separate. There's the other end of the spectrum is there are some custodians that say, hey, we actually believe many, if not most advisors, again, on their perspective, say, hey, it's better and cheaper and more efficient, or whatever word you want to use for the RA, if more of that technology is built into the offer in itself. That's less issues with data flowing back and forth. That's less issues with integrations going back and forth. And so we'll take a big chunk of what would typically be in a third-party tech stack. We've built it into our offering. There's typically still some third-party tools you need or want to use, like say like a CRM. But hey, we've put a big chunk of that in-house, and perhaps here's how that's priced out. So just know there's differences in how technology is utilized based on what kind of custodian you're considering. The next variable is to know that there's different value propositions for the custodians in the marketplace. And again, it's not to say that, I'll give you some examples, that one of these value props is superior than someone that doesn't have that value prop or is different. It's just what is going to resonate and be best for you and your client. So some custodians have the scale game that they can claim to be the largest or one of the big three or biggest players in the space. Others, it's name recognition, and sometimes they have a very long-established name, a very respected name, well-known name out there, and others have less of a well-known name. And then again, like I said, technology from that value prop standpoint, or how much technology they provide, and you can be different as well. So while, and I often say this in conversations, and I don't know the exact percent, but we'll say 85% of what a custodian does is basically a commodity. It's basically the same at every custodian. One custodian's ability to facilitate a trade of an equity is generally no better or worse than any other custodian's ability to do it. Yes, there's order flow and it's not perfectly exact, but generally speaking, it's the same. One doesn't necessarily have a far better client statement than another one does. So call it 85% of what a custodian does. And another example is just keeping your client assets safe. That's the number one purpose of a custodian, is to keep the client assets safe. Now that's not safe from market fluctuations, of course, but that's being just a good custodian for the assets, providing that custody services. So they all have to have that. And so they all do that though, and they're all regulated the same. And so 85-ish% of what a custodian does is roughly the same. It's that give or take 15%, and that's where that value prop comes in of what does make one custodian different than another. Is it important to you that you work with the biggest player in the space? Is it important you work with one that has more name recognition, perhaps with your clients, than another one? Is it one that has arguably better technology than another one does? Again, it's that value prop where you start to see the differentiators. And again, don't get caught up on that 85% because it's roughly going to be all the same in that sense. Next on the list is, and this is kind of related to value prop, is the services that a custodian provides. It depends on the kind of clients you have. Some custodians will be able to handle and service or help you provide service to those clients better than others. Perhaps you have a lot of high net worth or ultra high net worth clients, and they need some more specialized lending services easily available via the custodian. Some custodians are far more equipped to service that than other custodians are. So you also want to look at that service level of what will I get from you that I can then use with my clients, whether it's a need or a want. And again, that comes back to don't just get blinded by price and alone, because you want to say, okay, well, what value prop do you have? What services do you have? Some of which I either need for sure because of my client base, or I'd like and I want it because I think it'll be better for my practice and my clients going forward. So again, you want to look at what is the service offering. They do differ, and then usually that comes back to what is your typical client? How are you managing assets? Do you have a need for lending resources? Those sorts of things. And then, okay, let's apply that. Which custodians are best equipped to perhaps help you with those needed services? And then the final one of the variables, this is not an exhaustive list, is, and I've done all kinds of episodes on how you do not have to be 100% fee only to be in the RIA space. The RIA itself only has advisory assets, and the custodian itself in this context only holds the advisory assets. But many RIAs still do have typically some legacy commission assets that the practice has had for a long time, perhaps even a need or desire to still continue to be able to offer commission broker-dealer based solutions going forward. So there are many RIAs that have essentially the hybrid solution. As I lament about, careful with that term hybrid, it's used by different folks in different ways. In my context here, I'm indicating as where there's an RIA, and then there's also a need for some sort of broker-dealer solution. Some custodians are set up arguably better to accommodate that hybrid solution than others. So again, back to your practice, if that is going to be you and you do have a need for that broker-dealer component, again, just be aware some custodians are better equipped to kind of service that or be your partner than others are. So those are just a couple of the variables to hopefully help you get thinking about, okay, wow, there's not only 3, there's 12, and it turns out there's a lot, maybe more differences between them than I'm realizing. So hopefully that's been helpful. But I want to leave you just with a couple final thoughts as well. Number one, this is going to be a big decision. If you transition into the RIA model, there are a lot of decisions you have to work through. That's a large part of what I help advisors and teams is understand what are all those things you need to solve for, what are all the decisions you need to make, why you might choose one provider over another. So it's not to say that there's not many decisions to make. It's not to say that most all of those are very important. The custodian is arguably one of, if not the biggest decision you make. And the primary reason is it's highly unlikely that after you choose a custodian and you move assets to them, it's highly unlikely that you will one day move those assets to another custodian. You are absolutely able to do that for sure. As an RIA, you can certainly add a custodian, I'll mention that in a second, or you can replace your custodian if you want to move assets. But the reality is if your clients are happy with you, nothing else is changing with the RIA, it is what it is. Typically, RIAs do not move existing assets from one custodian to another. It's doable. It's just not desirable in most instances. It does happen on occasion, but it, for the most part, it doesn't. I'll just be blunt like that. So this is a big decision you need to make, because if you follow that trend, you likely will not change custodians, at least with whatever assets you start with at that custodian, unless something drastically happens along the way with the custodian that essentially forces you to or overcome this friction of making that change. So just know you got to put a lot of effort into it. That's a big part of what I help advisors do and teams do, is understand, again, who are the players, how are they different. Let's make this very big decision correctly on the front end, knowing the long-term ramifications that decision will have. Now, related to that, I just referenced slightly, it is fairly likely that if you start an RIA and you have some size and you grow to a large RIA, or already would be a large RIA, measured in hundreds of millions of assets, if not larger, most RIAs, when you reach that echelon, typically will become multi-custodial at some point. I've done an episode on that. There's different reasons you might do that. I won't go into it here, but it's likely that you will become multi-custodial at some point. But it's also likely that you will start with one. And that's typically always the best practice, because you going through a transition, you already have enough moving parts involved. You already have enough logistics to figure out and work through with your team, with your clients. You don't want to add unnecessary complexion by using two custodians from the jump, where you now have two different systems, maybe two different approaches to technology, two different ways to open accounts. It is generally always advised to start with one, but you likely, over time, if you continue to grow and become large, or again, if you already are large, it will just make sense at some point for you to become multi-custodial. So just know that this is not just a one-time decision. You might be adding custodians at some point, but again, it's not as likely that you would add someone and move existing assets. You would more than likely have your, often thought of as your primary custodian, the one you started with, where all your assets are, and you might add one at one point. Again, different reasons that might be the case, but just know that that is something kind of longer term that might come into play. Then another point, and I have this conversation often, if you are at a firm now that's at perhaps an independent broker-dealer that is not self-clearing, so they rely on a third-party clearing firm, the main players in the third-party clearing firm typically also have a custodial channel, which is separate from the clearing channel for broker-dealers. And that custodial channel is for RIAs, everything I've been talking about here. And you might think, oh, wow, I like this, the parent company I'm at. I just want to keep my assets there, and this will be just a simple little switch. Just to set expectations, it's not a simple process like that. It might not even be available to you. So just very quickly, I certainly can go into this in more detail with you if this applies to you. But if you are at a broker-dealer now and that broker-dealer clears through that firm, just keep in mind you as the individual currently are not the customer of that clearing firm. Your broker-dealer is the customer of the clearing firm, and your broker-dealer is many times bigger than you are individually. So the clearing firm and the whole company as a whole wants to protect that much larger relationship they have than you individually. So if you say, hey, clearing firm, I want to just leave my firm and come over here and go on your custodial channel, the custodians are in the business of attracting and, equally important, retaining assets. They would like to do that. They don't want to see you leave and take your assets elsewhere. However, they do have a quagmire because they do need to protect that much bigger relationship they have, and they don't want to give any impression that they're going behind the back of that firm to help facilitate you leave that firm, and still here you are making it easy to stay on the platform. So that's something I can talk through with you if that applies to you, but just know that is a quagmire. That's not a quagmire these custodians desire to be in. It's just the reality of having multiple different channels, and they each, the ones that are impacted, kind of handle it slightly differently. And even if you can overcome that, just know it's not, oh, let me just flip a switch and everything can just move from here to here. There's still paperwork involved. There's still process involved. That might be doable for you. I have seen it happen if everything kind of lines up and works out. But just long story short, just know it's not a give me. It's not an instant. You do need to be aware of this and think this all through, and it might not be available to you at the end of the day. And then the final thing I'll leave you with, and hopefully I've just kind of opened your eyes a little more to how important this decision is, the number of players, all the variables involved, some of the maybe challenges or hurdles you have to work through. Do not be intimidated by that. That is what I am here to help you with, is to help you understand the landscape. Let's look at your practice. Let's look at, based on your practice, based on what you plan on doing with your practice going forward, the kind of clients you serve, how you would like to approach technology, how you invest assets, the economics involved. That is a big part of what I do, is helping you choose which custodian would be, back to the top, best for your RIA. And hopefully by everything I've said here, you can understand why there is no singular best custodian out there that I could just say for all RIAs, and this custodian's the best. Whatever that custodian is the best for many RIAs, but there's other RIAs it's not going to be the best for because something else is just a better fit. So keep that in mind as you work through this process. I am here to help you with it. Do not be intimidated by all the decision points, but it does behoove you to do the education, to be aware of all this, And again, when I'm talking directly with you about your specific practice, I can help you figure out more specifically which custodian would be a fit, why, and then again, how they approach their value prop and pricing and all those sorts of things. So like I said at the top, my name is Brad Wales with Transition to RIA. This is a very typical thing I help advisors and teams do, is understand, hey, should you even be making the transition to the RIA model? And if it makes sense, there's multiple pathways you can go on. And then regardless of the pathways, there's all kinds of decisions that need to be made. The custodian, as I said, is one of the biggest decisions in that process. I have that conversation all day long. Happy to have that conversation with you as well. First things first, though, if you head on over to the website, again, transitiontoria.com. You can find all of the resources I make available from this entire series in video format, podcast format. There's articles, there's white papers, and at the top of every page is a contact link. Just click on that and you can instantly and easily schedule time to have a one-on-one conversation with me, whether you want to talk about today's topic or anything else RIA related. I'm happy to have that conversation with you. Again, transitiontoria.com. And with that, I hope you found value in today's episode, and I'll see you on the next one.